Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Friday, July 26th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. I'm going to jump, instead of going into the big picture and all that, I mean, what is relevant with this highly volatile trade right now is just kind of cutting to the chase for the day and into next week, really for the next couple of weeks. We gapped below on the earnings Wednesday, below 244.62. There's a rising 1/3 speed line that actually held the low about a week ago. We came off of it very modestly, gapped below it. And with speed line analysis, you've got a rising 1/3 speed line and a rising 2/3 speed line, both based entirely on the April against the July extremes. And so 1/3 of the way back, if you take the time frame in which this high was made back in July and you go down to this line, that is your 1/3 pullback point AB. And you draw a trend line from the low in the 1/3 pullback point in which the time frame of the high. So if that makes sense, I hope so. And the 2/3 speed line is the same. So in other words, if you take this high and you come all the way down to this point, that is the 2/3 retracement. So you're drawing a trend line from the low. It intersects at the 2/3 pullback point in the time frame of the high. And they're trend defining elements. They work pretty well. I've used them for years. I go back to the Chicago Board of Trade when I used them back in the late 80s, early 90s in the commodities analysis, and they work pretty well in stocks as well. The rule of thumb, it's not 100%, nothing is, but having closed below 244.62, the rising 1/3 speed line, you then anticipate 191.78, the rising 2/3 speed line. The rising 2/3 speed line at 191.78 is climbing and converging over the next week and a half or so with the descending 202.45 channel top. And that is this channel top here that goes back a full year. That is a formation that we settled above about a month ago, set off a significant rally that topped out and fell away. And so here we are. 202.45 is now expected. I'm just going to say that is now expected below 244.62. This is the 1 to 2 week time frame. You can sell 244.62 and buy this convergent range between 191.78 and 202.45, and you can do both. You can sell short at 244.62. Buy that short position back in the 191.78 to 202.45 area. You can also go long in the 191.78 to 202.45 area and take profits at 244.62. So either of these works, and I think this is our 1 to 2, 2 to 3 week dynamic right now. The question begs, will we see 244.62 before we fall back into the low 200 area, or vice versa? And for me, the answer is, and I'm looking for the chart right now, the answer is, bear with me, I'm looking for the correct chart. I hate when I do this. Here it is. This is it. So you've got the 244.62 rising 1/3 speed line. What we have missing here is that long-term channel bottom and the rising 2/3 speed line. But this rising channel bottom at 212.13 and a descending 1/3 speed line at 225.11. In other words, these are our day trade levels. 225.11 is your short sale zone if you're a day trader, and 212.13 is your go long zone if you're a day trader. And the inverse is true too. You can buy 212.13 and take profits at 25.11. You can go short 25.11 and take profits at 12.13. We could trade inside this area for a good part of the day. If we close today above 225.11, I'm answering that question I posed just a moment ago, which is to say, will we see, the 244.62 level before we see that lower zone of support in the low 190s at 202.45? So if we close today above 225.11. We should see the mid 240s within 3 to 5 days by the end of next week. And what we have here is not only 244.62, the rising 1/3 speed line, but we have a newly formed descending channel top. So this is a good zone, 244.62 to 248.86, that I would expect within 3 to 5 days of closing above 225.11, and one where if you're long from having bought it above 225.11, you can take profits, and you can also go short here, anticipating bearish rotation perhaps back into this long-term zone of support that is in the 191.78 to 202.45 area. And this answers the downside now. Downside, if we close today below 212.13, then we should within several days continue south into what I'm going to call the targeted zone of long-term support that begins at 202.45 and ends at 191.78, and they are converging on August 7th. They all come together at August 7th. So here's our upside once again, closing above 225.11. No good reason to be short Tesla as we move into next week. You want to be long 3 to 5 day pop into the mid 240s where profits can be taken and a short sale made as we move into the later part of August, because from here we can fall back into our zone of long-term support that is presently in the 202.45 to 191.78 area. And inversely, downside, if we close today below 212.13, expect the 191.78 to 202.45 region, narrowing daily, able to absorb selling not only through August, but this area is significant, maybe even through the rest of the year. That is, after all, the weekly channel top, that one-year channel top on the weekly chart at 203.83, that may well absorb selling through the rest of the year. And from here, we can round up and eventually make our way to the 328.12 long-term channel top. I'm no longer off. How should I put that? I'm not off 328.12 as a long-term objective but there is obviously a serious delay, and that delay involves continuing south into the low 190s, low 200s, narrowing daily over the next, well, I'm going to say 2 to 3 weeks below 244.62. We just might rally up to 244.62 over the next 3 to 5 days, which is indicated if we close today above 225.11. So yes, holding below 244.62, we have a 2 to 3 week target to the downside in the 191.78 to 202.45 region. But will we rally back at the 244.62? The answer to that is yes, if we close today above that descending speed line at 225.11. Until then, closing below 212.13 does signal the low 190s to low 200s. I think that all makes sense. I've said it about 17 times, and I don't really think there's really anything else that needs to be said. I'm going to leave it at that for Friday's Daily Tesla Report. Please click like, share, subscribe, and check out wickedstocks.com. Take advantage of our 5-day free trial. I'll be back Sunday afternoon with Monday's Tesla Report, and you have a great weekend.